Hey everybody, welcome to HugoClutch Crypto, where we break down the crypto market with no hype, just value. Today, we're going to be diving into 5 powerful reasons why Bitcoin could be gearing up for a major move in 2025. But before we do that, make sure you smash that like button, subscribe, leave a comment, ring the bell, do all the things. Now let's jump in. The first thing that we're going to talk about is the fact that retail investors have not really entered the market yet. So what does it mean that retail investors haven't entered the market yet? Well, when we talk about retail investors, we're not talking about countries, businesses, institutions, nation states. We're talking about people like you and I, the general public. And according to Binance, under 4% of people own Bitcoin in the world. And this is as of March 24th, 2025. This shows that it's still early on in its, global adoption. And we can further look at this by analyzing the Google Trends. What we're looking at now is the global Google searches for Bitcoin over the past 5 years. As you can see, when Bitcoin was about $68,000 in May of 2021, that's when it had the most global interest. Now we're sitting at about 110,000 and the interest is only about 30% of what it was in 2021. Now what does this tell us? This tells us that the masses are not paying attention. It hasn't hit major news. It's not on CNBC every day. And we can really take advantage of this by thinking that most likely new investors will be entering the market as this interest increases, and new investors usually brings new capital, which likely sends the price higher. What we're looking at now is the amount of Bitcoin available on exchanges over the last 2 years compared to the price of Bitcoin. And a basic lesson in economics is as the supply decreases, if demand stays constant, then price goes up. So the supply is this purple line, and as you can see, as it goes down, the black line, which is the price of Bitcoin, tends to go up. There's only ever going to be 21 million Bitcoin in the world. That's less Bitcoin than there are millionaires. So if every millionaire wanted to own one, they couldn't because there's simply not enough Bitcoin. I'm a believer that this amount available on exchanges is going to continue to decrease as there's more people buying and taking them off exchanges, which will likely lead to the price to increase. Now you might be wondering, why do you think the supply of Bitcoin on exchanges is going to continue to decrease? Well, here's a list of the companies that own Bitcoin. Many of them are continuing to buy Bitcoin on a daily, weekly, or monthly basis. For example, MicroStrategy owns close to 600,000 Bitcoin right now. However, they have the goal to own close to 1 million by the end of the year. This is also not factoring in many of the nation states and countries that are buying Bitcoin every day or plan to buy Bitcoin. For example, El Salvador buys Bitcoin every single day. As more and more countries and companies adopt this policy, that will likely lead to a supply shock for Bitcoin. What we're looking at now is a measure of the M2 global money supply. Now what is that? That is a measure of the cash, savings accounts, check deposits that is in the economy in the world. I've also overlaid Bitcoin with a 90-day lag because usually it takes some time for that money to trickle into the economy. And as you can see, while Bitcoin has not exactly followed the M2 supply, it has followed it pretty closely with that 90-day lag. So what does this mean? This means that if the trend continues, Bitcoin is likely to continue its upward momentum. Now that we've looked at the supply, we're going to take a look at the odds that the United States cuts interest rates this year. Generally, when the United States cuts interest rates, companies take a more risk-on approach compared to a risk-off. And individuals take more of their money and invest it, or they buy a house when the interest rates go down. So likely, as people take a more risk-on approach, money trickles into investments such as startup businesses, or in this case, we're going to be looking at its impact on crypto. The Fed is in charge of controlling interest rates in the United States. This tool allows us to analyze what the implied odds of what the rate will be at certain times. As you can see, in June it looks like there'll be no change from the current rate of 4.25 to 4.5. As you look at July, it looks like there's a higher chance that it lowers. In September, it looks like it's more likely that the rate will be between 4% to 4.25%. We look at October, and then if we look at December, it looks like the most likely outcome is a 3.75 to 4% interest rate, which would be a cut of 0.5 from current rates. What this means is there is likely going to be a decrease in the cost of capital this year. We've covered a lot already, but I'm going to touch on 2 more charts that are important to my price prediction. Bitcoin tends to follow something called the 4-year cycle, which it has followed since its inception. And where I think we are on this cycle is exiting the correction and leading into greed and speculators. But like I said earlier, retail isn't here. So I think we have not got to that phase yet. And I think at the end of the year, that is when we'll hit the blow off top. And this is important because in my price prediction, you'll see where I think that blow off top will be. The end of the year timeline also aligns with the periods of when to make money chart, which has been very accurate, especially recently. You look at 1999 before the dot-com bubble, then the crash. You look at 2007 before the housing market crash. Then you look at 2016 before the stock market plunge due to the Chinese sell-off. You look at 2019, the peak right before the COVID-19 crash. And then it's pointing to another peak in 2026. This information isn't, golden, written in stone, and always accurate, but it's something that I'm using for convergence for my price prediction. Everything we've talked about is what goes into my price prediction. Retail investors aren't here yet. The supply on exchanges is dropping fast. M2 supply is expanding. Quantitative easing is likely this year in the United States. And the 4-year cycle aligns with my price prediction. I predict that Bitcoin will be trading at some price between 175,000 and 210,000 between Q4 of this year and Q1 of next year. Thank you for staying to the end. I hope you enjoyed learning not about hype, just about value. Leave a comment with what your price prediction is for the end of this year. Peace.